Good afternoon, all. Camelback Trading 2724 and the pitfuturestrading.com coming to you this Monday afternoon, March 16th. And we're looking at the market profile of the SPY ETF here on Window Trader. And I have the last 3 days on there. And as you can see, a very, very ugly day again. Very ugly finish. Came out of a 2-day balance on a gap to the downside. Now, we halted right away, reopened, traded down initially, but then had a very good run up in A, closed the weekly gap, B balanced, came out of C to the upside. Right before we took out B's high, I got long looking for the daily gap to fill, which is what happened. Got out of that trade. I did not stay in it. In these markets, I'm taking... When I see profits, not going to be greedy. I did a lot of different scalping throughout the day. Again, yes, you can make some really, really good money if you're patient. Now you don't even have to be patient because it's running so much, but you could also lose a lot. So if I'm locking in some money on these trades, I have no problem getting out of them. We actually had a chance for a trend day up. Yes, with the market down at 1.8% at that time or so, we had a chance for a trend day up, as we had two sets of single prints. Now I know the ES did not; they only had one. ES was different today because once they opened, they stopped right away, and so it was a different setup. We one time framed up through D, even E. Now E changed a little bit. We filled the first set of single prints, and you never took out D's high. So once F came down and took out E's low, you stopped the one-time framing up. We actually one-time framed down from the high of the day through J before K put an end to it. And K ends up being our afternoon rally high. POC was only 8 wide, value lower on the day. Again, I did some scalps. I scalped once F took out E, did a quick short play to the downside. I was long in G period when it came down. Didn't fill the gap held. That was a good trade. I finally closed out single prints. Went long in J period also. And again, I'm talking about 10 contracts here, folks. Not my 50 to 100 contracts I play with in options. I'm talking about 10, because in 10 contracts, you could be up or down $1,000 literally in about 15 seconds. So, and that's why I'm not holding on to them when I am in the money and having a good trade. Now, M period. So K came up, had the afternoon rally high. L never took it out once, and L took out K's low, stopped the one-time framing. Now, M period was interesting. A colleague, a very good trader that I've been dealing with and very smart, and he's pointed this out to all of us, that M period has a good track record of revisiting its opening. So when M period opened today, it opened at 246.01 and automatically went down. And it kept going down, obviously. I actually went long the ETF for 2 reasons. I thought we would go back to where M basically opened. And if not, I was going to go, and I'm talking about 300 shares. I was, again, so a lot cheaper than the options, that's for sure, as far as getting hurt if it went down. Well, lo and behold, it rallied. Now, unfortunately, my machine froze up. I certainly didn't get the high of M, but my main goal was not only I got long towards the bottom, but my goal was to get out of the long and go short at M's opening. Well, I got out of the long once my machine unfroze, but by that point, M was already trading down, and then I certainly could have still shorted it because it came in 7 points, but I never did, and that's fine. As far as destinations for tomorrow, so for the upside, our first one will be K's high. We were 8 wide, okay? M's high, 8 wide we finished. So the POC, yes, will be something to look at, but I want 9 or more wide. K's high of 250.104 is our afternoon rally high. Then we have today's high of 256.90. We have 257.10, which was 11 wide from March 13th. Okay, that was initially a downside reference point because we had closed up here, right, on Friday. Well, it's now an upside reference point because we never traded at it. And then above that, we have Friday's high of 271.08. Now, again, I would keep A's high in mind at some point if we're to get there, because that's where the price probe started from. So we'll see if there'd be sellers instead of buyers there again. For the downside, first destination is today's low of 237.36. Then the 2018 yearly low and monthly low of 233.76. Below that, 233.18 daily low, 233.08 daily low, 232.88 weekly low, 232.51 monthly low, 231.61 monthly low, 231.38 afternoon pullback low from February of 2017, 230.88 daily low. And for now, we'll stop there. Now let's go to the charts. So monthly, we took out January of 2019's low. Okay. We did not get to December of 18's low. That's obviously, like I spoke to you about this morning, my next big destination. I would like to get there. I'd like to get there and see if we hold it, if we get underneath it and snap back in. But I'd like to take it out and then love to get some excess and come back in. Yes, this could be our low today, 237.36. But I'd rather take this out and come back into it and then start balancing. And believe me, it's going to have to be a big balance, and it's going to take a while to carve out. If we do not hold today's low or December of 18's low, well, then, like I said this morning, you're going to have some pit stops around the 208 level, the 198 level, and then around the 180, between 180 and 182 level, where we had these four lows that held. Weekly, we're down. We're one time framing down 3 weeks. This is the first day of the fourth week. Tried to rally into last week's range, got kicked out. We closed at 239.85. Again, this weekly low is that monthly low also from December of 18, right? December 24th of 18, Christmas Eve. Still would like to test it to see what we get before trying to start a balance. And then on the daily, we came out of a 2-day balance on a gap to the downside. We filled the gap, got into the 2-day balance pretty nicely, only to absolutely give it all back and a lot more and close only $2, $2.50 off the lows. Volume, 282 million with the after hours. So again, we're going to do over 300 million shares. So this selling's not over. You know, after hearing the press conference today that Trump gave and the CDC, I mean, they're talking about July and August. That's a long ways out, folks. That's a long ways out. And, you know, they cut rates last week, emergency. They did it again last night, infusing all this money into the market. But all they're doing is really helping the big banks and the big companies. This is not right now going to trickle down to the people who are going to really need it, even though they're talking about helping small businesses and whatnot. They're going to get hurt. They're going to get hurt badly. You're going to definitely, like I spoke about this morning, have furloughs and most likely layoffs down the road. You know, 2020 earnings are going to be horrendous for most companies. And again, I wouldn't doubt it. At some point, this puts us into a recession, and the market as a whole likes a Republican president. So what's going on here is also going to jeopardize his reelection if things continue to go as they are towards November. So keep all these things in mind, why this market is doing what it's doing. Again, I'm in the camp of let the market seek the level it wants to go to on its own. by constantly trying to infuse money, cut rates, basically manipulate the market. It does more harm than good in the long run. Look at what we did. Look what we did on this whole run up, right? It went up on nothing, and now look, they've done everything to try to stem the tide, and look where we are. We've wiped out 2.5 years almost worth of work in 18 trading days. Anyway, I hope you had a good day trading. Get some rest. Have a great night, and we'll speak prior to the opening tomorrow.